Hello, everybody. Joe Malone coming to you live on Dallas Trading Floor. Well, it looks like Tesla kind of crashed and burned a little bit on Thursday after earnings. It just kind of gave up the ghost and moved lower. So I had to get out of the stock myself. I did fortunately I did sell about 40% of my position coming into earnings, which was very fortunate. But I did take a little bit of a ride down on some of my other stock. I did sell it. I sold all of it, and I did sell a call option, a 315 call option, and that worked out well because it expired worthless. So I got all the money for that. But the Tesla's run may be over with. At least in the time in at least in the at least in the time being. This is kind of what David Ryan had to say. And he's basically the three-time U.S. investing champion, and basically he said that here's the thing about what's going on with Tesla is that it does look like on the daily chart it made three big moves since June 21st, and unfortunately the latest move, the July 3rd move, was on lighter volume, and then the pullback was on heavier than average volume. So basically what he's saying here is that well, we may, it may be a little bit of a time before we have another opportunity with Tesla. So I put together this little chart here. Hopefully, kind of shows some of the support here. Basically, kind of what happened with Tesla was that we moved up very, very nicely. Of course, almost to 300. We hit 300, and then the pullback started. And we got a down day, which we did not get support at the 21-day exponential moving average. That's the green line here. And today we fell once again all the way down to 259.95. Now here's the thing about that: we do have potentially, we do have potentially a we're hoping for a bounce here. What I'm thinking is that the support level is going to be right about at 250. I've put a little bit of line here. We're looking at basically the daily chart here. I think this next support level is going to be about 250. Part of the reason why I believe this, of course, is that we have this a little bit of support there, and I do think we're going to go down possibly to 250. We may be going down as low as the 50-day moving average. That would be kind of amazing, and that's way down here at two way down way down here at about 235. So hopefully that won't be the case, but we may get another chance. Of course, I think what's going to happen with Tesla is, we're going to have to build another base, and we may get another opportunity to come into the stock. But right now, just not a good time to be buying it, even on the pullback, because it just is not looking good. Just take a look at the indexes. The indexes are looking well. The Nasdaq was down 0.22%. S&P was up and the Dow was up. So it does look like we may be getting a rotation out of tech. And that I don't like that, but that may be happening here. It does look like there's some strength in some of the industrial stocks, and I was just scanning some of my stocks here, and I was just looking to see kind of where there was opportunity, and I came across an interesting stock which I really like. It's in the oil field services area. It's Baker Hughes, and you've probably heard of the stock. It's been around forever and ever, but it is a good stock. Now, here's what I've done here. We're looking at the weekly chart here, and as you can see, I've drawn it. That dotted line is kind of the reversal line. We did make a move up, basically last week, and now we are sort of making a move towards the pivot. The pivot being basically, right about at the top here of the, basically at the top. Currently, we are about 6.5% above the 21-day moving average on the daily chart, and we're a little bit further away from that on the weekly chart. But here's the thing: I do think that this is setting up very, very nicely. The symbol on this one is BKR, Baker Hughes, and basically what happened is the composite rating went from 91 to, and it doesn't show on this chart, but to 99. So very strong composite rating, and I do think that we possibly have a potential here for a nice move. Baker Hughes BKR. So something that you might want to look at. Now let's take a look at the live chart on this one on Baker Hughes, and basically you can see the pivot here is really at about 3750. That's kind of where it tops out here. It's come in this sort of this kind of cup with handle, and then you know blasting out of that handle, kind of thing. This is the weekly chart, but if we go to the daily chart, this is where you can see kind of what's going on in terms of where it's at. It's a little bit, as I say, it's a little bit extended from this 3281 21-day exponential moving average, but I definitely think that it's holding right at the 10-day line. We could put it in a limit order maybe at 35. That might work very, very well. That might work very, very well at about 35 for the limit order. So this is one that I am looking at seriously in starting a position. I don't currently have a position in this one yet, but I am definitely looking at doing a position on this one, because I do think that we're going to see a rotation out of some of the tech stocks into into basically some of these other ones. Well, let's just show you what I do have. I did have done a fair amount of selling. This is what I've got currently. I've got STM. Currently, I'm about 75% in cash, but I do have some other positions. One is ST Micro. That was down a little bit today. Volume was up on it, though. I have a stop at about 50, so I'm hoping that this will reverse course. Rissa Networks, this one has been doing well. It's off a little bit. It's up a little bit today, about 0.13. Let's take a look at that one quickly over on the live chart. This is ANET, ANET. This is one of the few techs that I do have, and it does seem to be making its move there. So this is ANET on the daily chart. As you can see, it kind of came up here. Resistance is at about 175. We pulled down and we're sort of at this level, so we're kind of in the holding pattern. If we go to the weekly chart, you can kind of see it a little bit better. It's sort of got this resistance here, so hopefully we can move above that. We're at almost the all-time high, and we are hopefully catching up a little bit to the 21-day exponential moving average. So that's one of the ones that I do have that I did increase my position in. One that I decreased my position in was Lattice Semiconductor. It has not been doing well, but hopefully today it did have sort of a move up. But let's look at LSCC. This is one I do have, but it has not been. It was performing well, and now not so much. So here's kind of what Lattice is doing. This is on the weekly charts. Come right up. Basically, 95 is resistance. About 95 or so is resistance. It's come down, and it looks like it has gotten support at the 21-day exponential moving average. Let's hope it stays there. That's basically 87 here. So hopefully, it will bounce off that 21-day exponential moving average. It does look like it's getting support there. So that indeed is a good thing. All right, let's get to some of the other ones that I have on holding. This is on. This is the Roger Federer shoe company, and it has it's been doing well. It's number one in its category, behind I think the Skechers, I believe, is the is the number two. Yeah, no, I'm sorry. Crocs is the number two. Skechers, I think, is further down. But right now, this one is basically at 34.62. You can see the line here. It's come down. It's tested the 21-day moving average, and it is now above the 10-day average. Hopefully, it's going to move higher. It did okay today. It moved up about 30 cents, 0.87% on that. And then I've got Celsius. That's the drink company. And let's take a look at that one. CELH. And that is looking fairly good. All right, let's see. My camera just cut out. Gosh, always seems to have the issues. There we go. Okay. So we're back. And let's take a look at Celsius Holdings and see how that looks. And basically, again, kind of coming up, kind of getting stuck here at about the 150 range. This is on the weekly chart. Let's look at the daily and see kind of what's going on here. Pulling back, hopefully we'll get support. It may get support at the 50-day line. It's below the 21-day line, and hopefully it will get support there. I do like the stock, but it did come way up here. If we go back on the daily, on the weekly chart, you can definitely see that. Yeah, it came down way up, and then it's pulled back a little bit, but moved above this resistance at about 120, and then it's moved up from there. All right, let's get to your questions. Thank you so much for indulging me. All right, let's go for Mr. Nader. Thank you. Hey, thank you, Ben. I appreciate it. Let's look at Roku, Roku, Nvidia, and Datadog. Let's look at the dog first. Datadog. This is the one I wish I didn't sell. I sold this one into strength. I took some profits on it. Always that way, always the way. You always can do better in this game. That's for sure. You can always do better in this game. All right, let's take a look at this one. Okay, Datadog. We're looking at the weekly chart here for Datadog. So we're finally regaining some of its past glory. Datadog was way up here at 200. Look at that. That was back here in 2022. It's pulled all the way down, and now it's starting to make its move higher. Currently up to the resistance here at 109. Let's look at the weekly, and let's go to the daily chart to see if there's any way we can possibly get back in it. It does look like we're getting some support right here at the 10-day moving average. Now, here's the thing about that. Here's the thing about the 10-day moving average. Basically, when a stock is in an uptrend like this, and we're definitely in an uptrend, you want to try to buy it as it pulls back to either the 10-day or the 21-day line. Typically, I like to use the 21-day line, but looking at Datadog here, it does look like it's definitely has not. It's only touched the 10-day line once since it's sort of its breakout from this level. So this looks like a fairly good place to get into the stock. I mean, let's look at the weekly chart here. This is a strong stock, and it does look like we're getting some support here, right about here. So definitely, I think we could make a move in here. We have some good stuff going on with the stock. The 10-day line is moving way up. Also, the 21-day exponential moving average, and we are very far above the 200-day. We broke out of the 200-day basically here in April on earnings. The earnings were good for Datadog, and we broke out. That's when we broke out, and now we're starting to see some strength. But I would be careful right now, only because the market is not favoring tech. At least right now, there seems to be a movement out of tech, which is not what we want to see, of course. But that definitely is the case. So we're definitely seeing some movement out of tech. But I do think that Datadog is actionable. Let's look at Roku. I'm going to use a different chart here for Roku, but let's see if we can go with Roku. Roku, I really like this stock, of course. I like it better than Netflix, and obviously, I'm glad that you didn't buy it before earnings on Netflix, because Netflix earnings were not so great, unfortunately. And it did send the stock down. This is the Investor Business Daily chart here, and we're looking. Let's look at the weekly chart, and then we're going to switch to the other chart that I'm using. You can see by this chart that that Netflix, that Roku has pulled way down. Basically, it was a $450 stock back here in December of 21. That's sort of when all the wheels kind of came off, and everything pulled back so strongly. That's why 2022 was a very bad year, of course, for the stock market, moving down. But now we're starting to get some support. We basically there it passed its first test at about 60, and now it looks like it's going higher. The question is, can we make a move on it? Let's look at Roku. I've got the Datadog chart up here, but let's put it in the Roku chart and take a look to see if there's any opportunities here on Roku. All right, we're still pretty far down on the weekly chart, but let's go to the daily chart to see if there's an opportunity. This sort of it did punch through resistance. Resistance was about 73.50. You can see that with its mark there. It's come right back down. See how this works? This is why you always got to look at these resistance lines. It came all the way up to 73.65, then it pulled back all the way to the 50-day moving average, and then it moved up through the pivot again, and now it's settling here again. So the question is, will it stay on the 10-day line? If it does, that's probably a pretty good thing. But my guess is we're going to get a pullback, probably to closer to the 21-day exponential. So if you're not already in this one, what I would do is I'd wait a little bit on this one. I definitely think we're going to get a pullback. My guess is, what's going to happen on this is that we're going to get a pullback, possibly. And let me show you kind of how I think the pullback may end up happening. I think the pullback. Put this in there. Trend line. Okay. There we go. Okay. So I think what's going to happen is we're going to get this. We're going to kind of get this line in here. And what's going to happen, I believe, is that we're going to come right basically to about the 21-day line. I think that's going to come up. It's gotten resistance there. It came through, but not enough power. There was a fair amount of buying in there, and then it pulled back on this line. My guess is that it's going to get support at the 21-day line. You see, what's happened is you can see it's been steadily moving up that 21-day line, but it's pierced it twice. But I think it's going to get support there. So my guess, more Roku, if you want to be in Roku, is to sort of wait a little bit, see if it pulls down below 70. I think that a good place to buy this is going to be from about 68.50 up to 70. I don't know if it'll pull back this much, but it definitely looks like it probably will pull back some more. It was off today at 73.50. So don't buy it here. Wait for it to pull back a little bit more, and I think you'll be pretty pleased with yourself, because I do think it is long term. It's looking good, but it's going to be pulling back a little bit more. Let's look at Nvidia also. That's a good one to look at as well. Nvidia is probably the best stock right now in the market. Unfortunately, I don't have it. I took profits on this one. I had two positions in this thing, and I took profits on it, but it is looking very good. If we go over to the IBD chart on this one, the Investment Business Daily, very good chart, by the way. If we're looking at the weekly chart, you can see it's come up, and it's basically getting kind of rejected at the 500-day line. Let's take a look at the daily to see kind of what's happening. See how it's coming up, and then boom, right, just a little bit below, just a little bit before 500, about 475, 477. That's where it's going to get. That's where it's getting its resistance right here. So would I buy it here? No, I would wait for the pullback, probably closer to that 50-day moving average at about 390. I don't know if it'll pull that down that far. That would be amazing if it did. But let's jump on over to another chart to see kind of if we can take a look at that NVIDIA, and there we go. Okay, so looking at a little bit more detail here on this chart. with the NVIDIA. You can see that it's basically holding that 21-day exponential line. So I definitely think it's going to pull back. A good place if you could get in would be 434.50, about there. So right about here is where I think that it might be a very good place. Let's move it back there a little bit. Kind of show you kind of how much above we're looking at currently right now. But we're looking at not that much. There we go. That's about. We're almost on. We're almost on the. Let's see, yeah, if I can kind of draw that out a little bit. Yeah, there we go. Okay. So what's going on here with NVIDIA is I still think it's pulling back. I think you should wait for the pullback to you should wait for the pullback basically to the 21-day exponential, and that's what I'm trying to put in here. There we go. All right, there we go. So that is a pullback, would be a pullback of about 1.15%. We want to basically come right back down here. I think the place to buy NVIDIA is at about 434.50, because that's where the 21-day line is. I think it's going to get support there. So, but it definitely has resistance at about 475. But I think that we could get it on the bounce on the exponential. So that's where I would look to possibly buy. That's where I'd look to possibly buy NVIDIA if you want to get into NVIDIA. So, I would put a limit order on NVIDIA at, and then I'm going to put it right basically at the 21-day line. That is 434, and that's kind of give you the. So what I would do here is I would put a limit order in right about 434, maybe 434.50 or thereabouts. But that's where I think we're going to get some support on NVIDIA. Definitely worth buying NVIDIA because I definitely think with the AI, it is a leader and really, really good stock. All right. Let's see if we can get to more people on TikTok. Thoughts on NVIDIA? Okay. Chip News isn't the best. Yeah, I agree with you on that, but I still think it's a very, very strong stock. Tesla, we did a little bit on Tesla. Let's see. Oh, thank you very much, David. 406 MT. Thank you very much. You're doing good, man. All right, thank you, man. We're making money. We're trying to, anyways. Okay, let's see. AMC is running after hours. Wow, why would anyone be buying AMC? Gosh, I don't know. Let's look at. I want to jump on over to AMC to kind of see what's going on. What's going on with AMC? So I'm gonna look at AMC. Of course, this is American Multiplex Cinemas, and I guess that the Oppenheimer movie maybe is making it work. I was looking for a place to see it. I really want to see that movie, but this is a terrible chart. I mean, we're looking at the daily chart here, and as you can see, it just kind of just moving down to nothingness. Not really that great. Let's go to the weekly chart. This is terrible. I wouldn't buy this chart. No offense to anybody here, but no, I wouldn't buy this chart. This is headed down. It's below the 200-day line. Relative strength is 8. That means that 92% of the stocks are better than this one. I just wouldn't buy it. I could just tell you, it may be moving after hours, but I just don't think so. AMC. Let's just look at a more detailed chart here. Wow. I can't get excited about this one. This one I would just, have to say, unfortunately for everyone, I would just have to kind of say, don't buy AMC. Yeah, just don't buy this. Don't buy this one. Just please don't buy this one. This one probably is going lower. This one's probably going lower. So don't buy AMC. It's just you don't want to buy a stock like this because, as they say, it's you don't want to catch that falling knife, and that might be a falling knife. So we just don't know. All right, thank you, Lisa. I'm sorry I've been out a little bit. I try to come live every day, but sometimes I mess up and, but thank you for following me. I really appreciate it. Okay, let's look at Lululemon. And Lulu is, this is a stock that I have bought and sold, and I have never made money on. I just can't. For some reason I can't figure this company out. Maybe it's because I don't buy their stuff. So maybe if I bought their stuff, then I could figure them out more. It's doing very well actually. This is the weekly chart. Right below that 400 level. Let's look at the daily chart on it. And again, just kind of hanging out here. This is sort of the higher high here at about 386. It definitely is getting some resistance there. Um, I don't know. Let's go and see if we could find anything on Lulu on the more detailed charts here. Well, this is Lululemon, and we're definitely pretty close to that to the 21-day exponential. Let's see how close we are to that. I want to see how close, because this is going to tell us kind of, is it, or would we be buying extended here or not? And it looks pretty close. I mean, definitely speaking, I mean, it looks very close. It's only about 1.39% above that 21-day exponential moving average. So, it definitely is not extended. That's a good thing. But I just can't really figure out. It had this gap up here. That was odd. I guess that was on earnings. Yeah, it was on earnings. They had great earnings. That's why. On 6/1, they had great earnings and they had this nice gap up, came down, but definitely getting some resistance right here. It seems like, it really can't get above about 390. So, would I buy this? I don't know. I just don't know. It's definitely within range. I don't know. I'm my I would watch this one. I probably wouldn't buy it because I kind of want to see it move above the resistance at about 390. But it's not doing badly, and it does have some very very good numbers. So there you go. I mean, that's the thing. Let's look at Lululemon, and then let's look at LSCC. I have this one. I have not been doing well with it. I will be honest with you. It did get a bounce today, thank goodness. Finally, it got a little bounce here at the 50-day line. So that is a good thing. I do own the stock. And let's go over here to LSCC. But I did reduce my position. I did reduce my position on this one, but I do own this, and it is making a bounce, so that's a good thing. Finally, it really, normally I don't like to see them. I like to see them hold on the 21-day exponential. When it pulled below that 21-day, that's where I reduced my position. And yeah, that's just kind of the way it is. The sort of the upper limit of it. I mean, the kind of the resistance here again is let's put that resistance in here. Is right about here. You can see, there you go. That's kind of your resistance for this stock. It's, as it gets up to 97.50, that's kind of where it's going. That's your resistance. And it is definitely pulled way back there. So it kind of has to build a base here. That's what I'm seeing. I don't know. I jettisoned part of my position at the 21-day line, and I'm still in the stock. I have a stop basically at about 85. So if it falls below that, I'm going to get rid of the rest of my position. But this could be doing a lot better than it is. I'm not adding to this position. I'm not adding to it at all, just because it's kind of the way it's going. All right, Netflix. Let's look at Netflix real quick. Netflix. Jump on over to Netflix. NFLX. This was the second really big earnings that we had on Thursday, and it definitely didn't. The market didn't like it either. It didn't have great earnings. This is showing kind of what happened. We were coming up there to 500, and then boom, the earnings not so good. Uh, Big sell off there. Yeah, let's see if we can come over to Netflix NFLX. Let's see if there's any support here. Yeah. See, this is what I don't. This is kind of what happened that I don't like. It dropped below that 21-day exponential, and that was very very key. The 439 level, because it's down to that, it could go as low. Hopefully, it won't go this low, but 409. That's where the 50-day is. Right now, we just have to sit and watch and wait. So for this one, for Netflix, if you are down 7% or more, sell. So that's really the thing we got to do. We got to protect. We've got to protect our capital. So if you're more than 7% down on this one, Netflix, you probably should sell. I mean, I know that's painful, but if we're down more than 7% on this one, I would sell it, just because it may not. Hopefully, it's going to get support at 403. We'll hopefully get a support here, but you know, the next stop may be 409 on this one. So if you're down more than 7% on this one, I would sell it. That's what I had to do with my Tesla. I had a lot of Tesla, and basically I sold it. Why? Because it moved against me, and I always do that. I mean, if it's down more than 7%, I try to sell it, because that protects your capital, and that's so important in this game. All right, let's look at another one, TTD and CrowdStrike. I can't cover all of these tickers. Unfortunately, I'd like to just do it all day, but I can't. Let's look at TTD. This is the trade desk. Great stock. I love the stock. I've been trading this stock for a while. Really, it's in my opinion, it's sort of the only alternative to Google and Meta in the digital ad space. They do place digital ads on other people's sites, and so I really like their business model. And it did split 10 for 1. I had it when it was split. And currently it's trading, it just seems to have some resistance at 90. The question is, let's take a look. It's just kind of been solidly going up, and then it hit a little bit of a bump here, kind of made the jump on earnings and then pulled back. Let's see. I just want to look to see if we have how far off that 10-day, how far off the 21-day we are. Well, we're right at the 10-day. So let's see. I just want to kind of look to see how far off we are from that 10-day line. There we go. Okay, kind of put it up there. So we are definitely buyable here. This is really interesting. Now, it may pull back a little bit more. But we're only 3.58% above the 21-day exponential, which is a great place to buy it. Notice, by the way, how it always seems to anchor on that 21-day line. It came down here, it anchored there. So it does look like, if we get a pullback to about the 21-day line, which is basically 80.55, if we get a pullback to that, that may indicate a place that we could possibly buy. It does look like we're going to get a few more days of pullback, but we're in an ascending. It is an ascending pattern, and if you're buying on the pullbacks being to the 21-day exponential moving average, that's a really great place to buy it. So here's what I would do on this one. I like the stock a lot. What I would say is set a limit order for 80 85. So that's where I would look to buy. That's where I would look to buy TTD, would be about 80 85, because I do think that is a very good place. That's, we've got a little bit ways to go down. I think it's got to pull back another 3.58% to get there, but that's a really great place to buy it. Why? Because, well, as you can see, it has been getting support at that line for a long time. Even if we go back to the weekly chart, you can see we've just been running. Now, the weekly chart's a little bit different. This is the 10-day line, but it's been kind of making this move up, and I think it's going to continue to move higher. Even if we go over to the really go far out, the monthly chart, you can see it moved up really fast in 2020, and then it's kind of been making its move, and now it's starting to make it move to the higher high. This is a strong chart, and again, we're above we're above that 21-day line. So that's where I would do. What's what I would do? I would set that limit order for about 80-85 on TTD. So good stock. Really like it. Okay, well, we're almost out of time. Got a few more, so let's try to get as many as we can. All right, let's look at Exxon Mobil, and let's see, and Range Resources. Those are both good. Those are both good. Those are both good oil stocks, but I don't think Exxon Mobil (XOM) has been doing all that great. This is the monthly chart for ExxonMobil, but let's go to the daily chart. Yeah, the daily chart just isn't looking as strong. Let's go, and I just want to look at ExxonMobil and kind of show you why I am not a fan of it right now. And I just, even though I like Baker Hughes, which is in the oilfield services business, this one, and I've held this one. This is a great stock, but right now, the problem here, you can see this is the 50-day line, and it's moved below that 200-day line. That's what they call the death cross. That means we're in a downward trend, and so we don't want to buy anything in a downward trend. So ExxonMobil, I'm afraid, is out. But let's look at Range Resources, RRC. Right, there we go, Range Resources. That's starting to make an upward move. This is the golden cross, where the 50-day moves above that 200-day. That's the golden cross, and it is improving relative strength. 76. Still not ready to buy it yet. I want to see 80 or better on that relative strength before I would buy it. But let's look at Range Resources on the daily chart. Kind of a messy chart, but definitely we've moved above this $30 level. This is sort of resistance here. I wouldn't be ready to buy this one yet. I think it's too far above that 21-day line. Let's take a look at that 21-day line. Kind of show everybody there. Kind of move over there. There we go. So we're pretty close. We're 2.87% above the 21-day line. Typically, you want to buy within 5% of that line. I don't know. I'm really of two minds here with Range Resources. I mean, it is an upward trend, but the relative strength, that's where I'm a little bit leery here. It's only 76. I want to see 80 or better. So I would say no on both of these, ExxonMobil and on Range Resources. Now, the one I do like in the oil sector is Baker Hughes. And let's see if I can figure out what the symbol is on that. I think it's BKR. I think that's Baker Hughes. Yeah, that's Baker Hughes. Yeah. See, here's why I like Baker Hughes and not ExxonMobil and Range Resources. This is a much stronger chart. 89 relative strength. Notice how that's moving up. Also, you'll notice that the 50-day is above that 200-day. That's good. That's correctly stacked. This is the golden cross way back here in January. This one has been doing good. It's kind of come up here and it's created this cup. This is a cup, and then now it's handling out. So this is the one I do like in the oil services, not in the oils. So Baker Hughes, BKR, and not Exxon or Range Resources. All right, so that's kind of how I'm looking at it there. All right, let's see. We did Netflix. Okay. Yep, there we go. All right, SoFi. Interesting. For some reason, it doesn't want to let me. There we go. So let's go to SoFi. SOFI. Let's look at that first. course, this is the company that refinances student loans, and this one is strong, and it is coming off of a bottom base, as you can see. Came all the way up here. It's moved above, the 50 days moved above that 200-day. 96 relative strength. I definitely like that. This is a cup, and then there's sort of another cup, and there is resistance at 10. Typically, I don't like buying stocks below 10, but this is looking fairly good. So let's jump on over to SoFi, and let's see if we can get a more detailed view of it and see how close to that 21-day moving average is. We're on the daily chart here, and it does look like we touched the 10, and I just want to see kind of how it's looking in terms of how close to that 21-day line it is, because that's really a key level to buy it. All right, well, that's 5%, so it's basically in there. That's interesting. So it's potentially buyable. It's not. The reason I'm checking for this all the time is because one of the things you don't want to do when you're buying a stock is buying an extended. And typically, kind of the definition, and it's sort of my definition, it's not necessarily the definition, is you don't want to buy it more than about 5% above the 21-day exponential moving average. If you do, you're going to buy it extended, and that could cause you problems. You don't want those problems. And so this is looking fairly good. Let's see. Also, I want to put in the reversal line. I want to show you kind of the reversal line here, just so that you can see it. There we go. So this is the reversal line that we've got. And what am I doing here? Well, what this reversal line is that a stock will come up, it will get resistance, and then it will pull back down. And as you can see, it came up here, got resistance, pulled back to the 21-day exponential, then moved up, made another attempt, and then got resistance here right about $10, pulled back, and then now it's trying again. Now the question is it doing it on higher volume? What you really want to see is you want to see this on higher volume. And it doesn't appear that is the case, that it has come up on a higher volume. So we want to wait probably for a pullback, and then hopefully it will reverse. And if it reverses on higher volume, that would be a good place to buy it. So well, it does appear that my camera is not working. So that's probably it for today's show. Thank you so much, everybody. Sorry I couldn't get to everybody here. But if you are looking at this show, please, 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 it really helps us out. If you could like the show, that really, really helps us a lot. It is if you can smash the like button, that really that gives us that's a really good thing for us. So smash that like button. And also, if you're looking on the if you're looking at on the YouTube channel, please subscribe to it. It's www.youtube.com/Dallas Trading Floor. Smash that like button and also subscribe. I'll be back tomorrow. Well, I won't be back tomorrow. I'll be back on Monday at 5 o'clock, everybody. Thank you so much for taking a look at the show, and happy trading.